Hey everyone, Ben here. In this video, I'm going to reveal my top 2 growth stocks for 2021. These are 2 fantastic stocks which I think you could hold in your portfolio at least for the next 5 to 10 years, assuming you get in them at the right buy point. So in this video, I'm going to do a full deep dive advanced valuation using a spreadsheet which I've created, and I'm also going to give you guys the buy point so you know where to get in on these incredible stocks. So before we dive right in, if you're new around here, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you do find any value at all in this video, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. And if you do want to know exactly which stocks I'm buying, which stocks I'm selling, and access my entire portfolio, and join a thriving community of some of the finest people on the internet, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, let's dive in. So the first stock on my list is Palantir, ticker symbol PLTR. Now Palantir is a really interesting stock. I've covered this stock so many times on this channel. So they're basically a big data analytics company, and they're founded by the legendary Peter Thiel, who was also the co-founder of PayPal. Now their CEO is Alex Karp at the moment. Very intelligent guy also. Now the big data market is set to skyrocket in the years to come. We live in a time where we've got an abundance of data, and the problem we now face is actually capturing that data, deciphering it, analyzing that data, and then outputting practical applications. And Palantir solves that problem for many major corporations, from the defense industry to the CIA to even the NHS, which is the National Health Service in the UK. So let's dive into the big data industry growth. So according to Markets research, the global big data market size is expected to grow from 138 billion in 2020 to 229 billion by 2025. Now that's a compound annual growth rate of over 10.6% over the forecast period, and this was one of the most conservative estimates I found on how much the big data industry is going to explode. So what are the drivers of this explosion in big data? Well, everything is connected to everything these days, and then we also have major tailwinds such as the Internet of Things, which is basically the connectivity of everything from connected cars to smart homes to autonomous vehicles and many, many more applications. Now I do want to dive into a recent contract which Palantir won. So Palantir was awarded a £23 million deal to continue work on the NHS for the global health issue. Now initially Palantir was awarded this contract from the NHS on an emergency basis, but now they've extended the contract, so that's great news for the company. So Palantir has been hit with a lot of controversy recently with regards to its use of all this data. It's stated that Palantir has data on everyone, and this is the type of company which knows what you eat for breakfast.
Do you care for a cup of tea with your egg?
Yes, thank you. I'm starving, actually.
So back to this National Health Service NHS contract with Palantir. Now it seems a society called the Open Democracy is actually taking legal action against the NHS as they've partnered with Palantir. Now basically it alleges that Palantir lobbied a top NHS official over expensive watermelon cocktails. Now this is serious stuff. This is from BBC News. Palantir's UK chief, so they have a large presence in London, hosted Lord David Pryor, who's the chair of NHS England, and the night before the NHS's new technology division. Now the next day, Lord Pryor emailed to thank his host for the interesting dinner and also for the watermelon cocktails, which Sky News said cost about £60. Now to me, this is just all overblown. That is how business works, especially large corporate businesses. Each of those take each other out for lunch, buy each other expensive watermelon cocktails, and that's how you win contracts. That's just how it works in the corporate business world. Now Palantir is an extremely difficult company to value because it's a new IPO. Everybody was saying it's overvalued. So let's dive into this advanced valuation spreadsheet. Now, this was actually inspired by a spreadsheet which was created by a professor of finance at New York University. And what I've done is adapted it to make it slightly more user-friendly, and I've added on a few extra little bits. But yeah, it's a very advanced spreadsheet. So I filled in the industry, I filled in the revenues, I've even capitalized R&D expenses. So R&D expenses in accounting terms are classed as an operating expense. And basically when you capitalize them, you move them over to the balance sheet and you can spread out those expenses over a period of time. So I've added on all the details here. I've added on the revenue growth for next year at 35% predicted. operating margin 20% currently, and I've increased the pre-tax operating margin target to around 30%. Now that is really good for a software company. That's why I do like software companies. They tend to have higher margins. The estimated value per share for Palantir comes up at $9.47. Now, to put that in perspective, that's the value the company went IPO at, and everybody was saying it was overvalued at that level. Now, if I dive into the share price right now, so at this level here, it was $9, where the company IPO'd, and then it shot up by around 200% over the past few months, and then it's now corrected down from highs of $38 per share. It's now corrected down by 35%. So I think this could be a potential buying opportunity. It's at $24 per share now. Now that is double what it is on this valuation spreadsheet. So that's what you do need to take into account. But like any valuation spreadsheet or software, they're just tools, and what we need to do is interpret that in our own way and also look at different tools. So I've also looked at a DCF model, which is a discounted cash flow model, which is a simpler model. But according to that, the fair value per share is $28, so slightly above where it is right now. So there's a few different valuations, and I'm going to tell you how I've triangulated that to come up with my sort of fair value for a small position in Palantir. Of course, if it dropped to $9.47, that could be a load up the truck position where you can back up the truck and really load up with shares of Palantir. But in the meantime, I think this level here around $24 per share is a strong support. I've also looked at the technicals. $25, $25 is a strong support. This is also lower than the DCF calculation, as you can see here, which is classed as 14% undervalued at these levels. So that's just something to take into account. So I think around this price, $24, $25 is a fair value for a small position in Palantir. And then if it drops around $8, that's when I'd load up the truck on a company like this. Now, this is assuming the company's fundamentals haven't changed. So the company is overvalued with regards to a price to sales metric. So the company is currently trading at a price to sales of 54. So you're paying at 54 times the company's sales. So really the stock is priced for perfection, as all future growth estimates are based on the future growth of the company. One red flag I do want to mention though is there was a hell of a lot of insider selling as soon as this company went public. So when this company went public, October the 2nd, even when it was at $10 per share, $11 per share, Peter Thiel was selling a massive amount of shares, who was the co-founder of the company, $257 million of shares. The Founders Fund, which Peter Thiel owns, $20 million. Alexander Karp, who's the CEO, $23 million. Now, you don't want to see this amount of insider selling. To me, that says they think the stock is overvalued. Now, I do agree that, yes, this was a private company and they've held their shares for so long and now they want to cash out some profits. But it seems strange to me that this company didn't have a longer sort of lock-in period for these insider shareholders. There is a major sort of corporate governance issue with regard to Palantir. A lot of the power in the business is focused with Peter Thiel and with Alex Karp. So those can be benefits, I think, in terms of quick decisions in the business, but the negatives are that they may not have the rest of the shareholders' best interests at heart. So that's a red flag I do want to sort of bring to your attention, guys. But when also ARK Invest loaded up on Palantir, reloaded on Palantir, shall I say, when it dropped to around this $24, $25 level. So it looks like great minds think alike, and we all think that around that level, Palantir is okay for a small position. Now, this is not financial advice, guys. Palantir is still classed as an overvalued company, but I'm just giving you the information so you guys can make your own investing decisions, do your own due diligence. Now, stock number 2, I'm going to briefly dive into this one. So this company is called Chewy, ticker symbol CHWY. Now, this is really my play on the major growth in the pet industry. So the stock back in April 2020 was around $42 per share. And now it's up by 169%, so fantastic growth there. However, there has been quite a major pullback recently, by around 16% down. Now, this is the company here. So what I like about this company is not just the fact that this is an online seller of pet food, which is a good industry, of course, because it's e-commerce, but every supermarket sells pet food. What I like about this is they've got this online pharmacy. Now, I don't know if you've ever owned a pet or a dog or a cat and you've had to take them to the vet, and you can pay some ridiculous amounts for these treatments. So I think this could be a major winner for the company in terms of an extra revenue stream. And the revenue growth for next year is forecasted to be 45%. So that's faster than Palantir. And compound annual growth rate, 20% for the next few years. I filled in all the same details. Currently, it says the estimated fair value per share is $112 per share. So it currently says at $98 it's undervalued. Now, I have compared this again to the other valuation model, and that comes up with $42 per share. So really, I would say with this stock, again, you've got to sort of look at the two different valuations, say why is this one saying the stock's only worth $42 per share, and the other one saying it's worth over $100 per share. So I personally think it's somewhere in the middle, but I think around these levels, around $90 per share, is a strong support for the company's stock. So that could be a potential place to open up a small position, but not really load up unless it drops further to around the $50 to $60 price mark. So that's my two buy points for these stocks. They are notoriously difficult to value, as these are real sort of fast growing growth stocks. Many of them have been unprofitable for a period of time, but I've used the best tools in the industry on this planet available right now to try and give you guys the best valuation possible. So if you guys did find any value in this video, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you do want live updates, exactly which stocks I'm buying, which stocks I'm selling, and access my entire portfolio, and join a thriving community of some of the finest people on the internet, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.